Right, looks like we are live. Hello, everyone. Good evening. Hope everyone is doing amazing today. Got a very special live, very special live today, actually. So let me when you jump on, please drop your name, where you tuning in from, your business name. Talk about some very important information today. It's from all my entrepreneurs. If you're not an entrepreneur, that's okay too. But people know that I speak for entrepreneurs, people doing business 6 figures, 7 figures, and beyond, and really talking about how you can turn that income and revenue into actual wealth. Because we as entrepreneurs, because as we as entrepreneurs, all right, shout out to Houston in the building. Yeah, because we as entrepreneurs, definitely, we always focus on like making money. How can we make more money? How can we get more clients and so forth? But like, okay, when you're making money, when you see them profits, like, okay, how can we actually position that to actually have our money work for us and actually put that really into wealth, owning assets, and generation of wealth? All right, so let our very special guests in. Should work. Let's see. Hey, how you doing?
Hey Ryan, how are you?
I'm good. How are you doing today?
I'm good, thank you.
Yeah, of course. All right, so I see some folks joining. Got Philly in the building. Have a very special guest today. So before we get started, I always ask, share who you are, where you from, and your background.
Yes. So first I want to get some more people on here. So if you are on here and you know people that's interested in this conversation, feel free to share it out with a few people because we are going to be dropping some gems tonight. So for those of you who don't know me, my name is Dayana Reeves. I am a financial investment strategist. And basically what I do is I help people position their money so that it's growing in certain retirement accounts, in insurance, as well as in real estate. So I have a wealth of knowledge about all of those areas, and we're going to be sharing some of that tonight. And then I also have a program where I work specifically with nurses and healthcare professionals to help them build and grow their wealth. Because myself, I'm a retired healthcare professional, so that is the niche that I focus on.
All right, great. So we got some Philly folks in the building. Do me a favor, y'all. Share this out. Put in someone's DM. Drop a comment. Tag some of the people that need to be here. Because this is so important. Because like I said, as entrepreneurs, business owners, even myself, like we always just focus on making money. Like, how can we make more money? How can we get more clients? How can we get more revenue? But like that's not the end goal. Making money is cool and all, but at the end of the day, we got to put that money into owning assets, real estate, insurance, stocks, mutual funds, and so forth. Because how many of y'all, let me know in the comments, how many of y'all want to build generational wealth? If we the only two that want to do it, like that's fine, let us know. But if you want to build generational wealth, drop something in the comments, drop an emoji, drop a fire, drop a gem or something like that. So I want to go way back. How did you originally get started in this? Because I know, like, even for myself, like I wasn't born learning this information. When I grew up, my mom always said, you want to make money, you go get a job. It was never about owning assets, stock market investing, real estate, being an investor. It was all like, if you want to make money, go and get a job. It wasn't even about business and becoming an entrepreneur. My original businesses were in the pharmaceutical industries on the wrong side of the law. So just to be clear, but just being real. But I never like got this information growing up. So I'm curious to know like your background, like how you actually got started and all the amazing things you do. Like what was that journey like in the beginning?
Yeah, so I would say for me, it wasn't always like this either. So I grew up just following what I was told, right? I grew up knowing that I needed to go to college in order to get a good job. From getting a good job, that's when I'm able to, buy a house and buy a car. So I grew up traditionally just kind of like doing what I was told to do, right? So with that being said, I went through high school, went through college, and then I actually went on to grad school to get my master's degree because, again, I was told that the more education you have, the more money you can have, and, the better life you can live as long as you basically educate yourself. So I was following that academic path where I was just really just trying to rack up on degrees because I thought that having a master's degree would pay me X amount so that I can afford the lifestyle that I wanted, right? But when I was in my master's degree program at the University of Illinois, I was in a 5-year PhD program. And after my first year, I decided that I wanted out. Like, I was done. I was like, this ain't it. Like, I'm not really feeling this. And I kept on meeting with people that was saying that, you know, you're so young, you're going to be getting a PhD. Once you leave here, you're going to be overqualified, X, Y, and Z. So after my first year, I decided that I didn't want to do the entire program, that I wanted to figure out a different way where I can make money. So with that being said, I started learning real estate on my own. I started learning about finances on my own through like YouTube and like small courses that I would find. And I just kind of started learning the information. And then once I graduated school, I said, wherever I end up, like whatever city I end up going to, I'm going to immerse myself into that industry, right? So that's what I did. I went back to Philly and I joined a real estate club where we talked and networked for every single week. We talked about a different real estate topic. We learned about financing. We learned about how to get property, how to, rehab property and all of that. And then a mix of that, I actually met one of my mentors who was a financial advisor, and he kind of took me under his wing to give me some of the financial information. And then from those two areas, real estate and finance, I kind of paired them together. And that's why I do what I do now, because I think they're both so important. And I think just having the real estate side of things does not really matter if you don't understand the financial side as well.
Yeah, that makes a lot of sense. So how many of y'all got degrees, went to school and thought like that was the end all be all, and you got a master's degree? And where did you go for undergrad?
I went to Penn State. Shout out to my Nittany Lions.
Okay, was that main campus or was it one of the branch campuses?
Main campus only, University Park.
I know. No disrespect to the, if he was at Penn State Delco or Abington or something like that, but she got a real degree, in case y'all ain't know. So, yeah, that's good though. But, even for myself, like I just got a bachelor's degree. I ain't got no master's. But I thought, you go to school, you go to school, you get a job, and like that's the end all be all. But at the same time, and especially the way the world is now and how the economy is now and how people are making money in just so many different ways, like literally I make way more than the people that I went to school with, people that were my bosses in corporate America. And, I'm actually getting the chance to actually do something that I love at the same time. So yeah, that's definitely what I was taught. Yeah, I just make sure we weren't the only ones. If anybody else in here, like if that's what you were taught as well, let us know. Drop something in the comments. Now we're going to talk about the stuff that you should have learned in school. We should have been learning about how to get our credit in school. We should have been learning about real estate in school. We should have been learning about entrepreneurship and stuff in school. And that's why we're having this conversation now. So let's get into the meat of it since we ain't got too much time, because I know you're a very, very busy person. Got a lot going on. So let's start, many different ways to like put your income and stuff in different ownership and, money generating things. So what would you say, like if I'm, building my business, I got to 6 figures or beyond, I got my margins up, maybe I got 6 figures in profit or whatever. What would you say would be step number one? If I don't have many assets, but I have business income coming in, I got my profits, I'm putting money away, I'm using profit first, whatever accounting method I'm using. What would you say is like step number one and like what I should put my money into?
Right. So that's a really, really good question. It's very complex. So I would say as far as like the steps, we have to start with the foundation, right? We have to position the money. So the first question that you need to be asking yourself is, what are my goals, right? What are some of my goals? What are some things I want to accomplish? And based off of that, we can move forward. But just to take a step back, in general, if you are at that point, I know a lot of people that make money, but they don't know how to manage their money. They don't know how to position their money into certain things that's going to grow their money. So at the very minimum, I would say that you need to have an emergency savings account, right? Because you need that rainy day fund. An emergency savings account is typically 3 to 6 months of your expenses, of your monthly expenses, in one account, right? And I personally recommend to do it like an online savings account through like Schwab or one of those financial institutions, because they pay a little bit more in interest than like a regular bank. So they may pay like 0.5% to 1%, which is not a lot of money in interest, but it's more than what they're going to pay you if it's sitting in your regular checking at like your Chase or whatever. So I would say number one is the emergency savings account, because you want to have some liquid to be able to access that in the case of something happens. From there, I would say you need to get your retirement accounts together, because I know a lot of people, we're not thinking about retirement. We may be millennials or maybe a little younger or maybe a little older. And a lot of people aren't thinking about retirement, but it is a real thing, right? And with any type of investment, it takes time. So the earlier you start, the consistent you are, the more well off you're going to be in the long run, because the longer you wait, you're going to have to put in more money to play catch up, right? So I would say the emergency savings fund first, and then start positioning your money in retirement accounts. Now, for business owners, that may look a little different from just a regular person who's working at a job, right? If you work at a job, you're going to already have your retirement fund set up for you, and you just are told to put money in. A business owner doesn't have that, right? They have to create them funds for themselves, right? And that may look like them offering, opening up an IRA account, right? So me personally, I prefer a Roth IRA. And if you are over the income limits for a Roth IRA, then you can do what's called a backdoor Roth. I'm not a CPA, I'm not a professional accountant, but it is a such thing as a backdoor Roth, meaning if you make more money than the Roth allows you to put in, then you can get with your accountant and they can put your money in through a backdoor method, which is completely legal. With that backdoor method, for those of you who don't know, is basically giving you the opportunity to still invest in a Roth IRA, which is a tax-free account, and without having to pay taxes on that money in retirement. Right? Because a lot of people, where they go wrong is they will glamorize 401ks, right? But what you don't realize is that 401ks have not been taxed yet. So if you invest $1 million in your retirement fund and your 401k is $1 million, when you start pulling that money out in retirement after 65, that $1 million is now has to be taxed by Uncle Sam, because they never got their money. So you want to try to position your money into the most tax efficient accounts, which would be something like a Roth. So that would be another strategy I would say to use. And then from there, I would say it really just depends on your goals from there. Those are like the bare minimum, I would say, the emergency savings in your retirement account. But from there, we can get into more conversation about if it makes sense to invest in the stock market versus real estate. So I think that would be my answer to that question.
Okay, yeah, that makes a lot of sense. So let us know in the chat, do y'all got y'all savings accounts set up correctly? You put money in there on a consistent basis? Let me know. I know I read something, it's probably a while ago now, but it said like the average American like has less than 1,000 in savings or something like that. You know what I'm saying? And that's like sad to really think about that. And I know, everybody got certain situations, but at the same time, especially in the country that we live in, cost of living, going up, and it's just harder to just live and, have a car or just rent, bills, other stuff, food, not even mention kids and all that, everything that comes with that. So let me know if y'all got y'all savings account set up and if you got your retirement account set up. And you did see something interesting, because I know there's a lot of people too that, even if you have a 9-to-5 job, they still may not be setting up their retirement account, or they're not investing enough. They don't understand how much they're going to get matched or when they fully vested, or it's not even in the correct investments. Whereas like you put money into something, but you don't even know what your actually money's going into, and if it's actually a good fund, it's actually going to generate a return for you. I think it's can y'all still hear me? Okay, I think she might have went out for a minute. Let me know. Okay, I think she's back. Hold on. Right, there we go.
Sorry, I lost y'all for a second.
It's all right. See, the powers that be don't want y'all to get this information. You know what I'm saying? Like, this is really, really important information. But like I said, drop a comment. Let me know, like, if y'all got your savings together, got your retirement together. Excuse me, if you got an IRA, a Roth. I like Roth better as well. But I love what you said. So, okay, so that's, step number one. We got all that laid out. So now what's your thoughts on other things, like far as her? A lot of people talk about insurance and building your own bank and cash value and that type of stuff. And then, of course, if you recommend stock market investing, and that's broad in itself. And then, of course, we got to talk about real estate.
Yes, yes, yes. So insurance is one of those things where I feel like a lot of people of color just kind of like we overlook those things, right? Because how our minds are conditioned, for the most part, we are thinking about the now, right? A lot of us don't come from money. A lot of us, may have had hardships growing up. So we're just happy to be living in the now and getting money now, right? A lot of us just aren't planning for that future, right? And a lot of people, unfortunately, they don't think about estate planning and planning for death, and those things are real. So people can have unfortunate situations happen to them at any age. So it shouldn't be a matter of, okay, well, I'm not old enough yet, so I shouldn't be thinking about insurance, right? So what I tell everybody is that I don't care how old you are, how much money you make, you need life insurance, right? Everyone needs life insurance. Life insurance is going to be one of the easiest ways to pass down generational wealth, meaning that when you pass away, you can leave X amount of dollars for your beneficiaries. It's basically like you're buying money. Okay, so you're telling the insurance company, hey, I want $1 million to leave for my family. I want this to be set up. So now, as long as you can get approved for insurance, you will be able to buy the money. Okay, so that's with life insurance. And there's different types of life insurance. You have term life, you have whole life, you have index universal life. The one that I like the most right now is the IUL product. It's an index universal life. It's basically a whole life product that not only allows you to use the death benefit to pass down to your beneficiaries, but it also gives you what they call a living benefit, meaning that it's building up money in the policy so that you can use that money right now. You can use that money right now in order to invest, in order to start a business, right? It's called a living benefit for a reason. You're supposed to be using the money, okay? With that being said, with the IUL product, you can also set it up so that you get tax-free money in retirement, right? Because what we talked about earlier is that a lot of people max out their 401ks, but that money was never taxed. So $1 million may turn around and be $700,000. You know what I mean? Versus if you have your money in something like an IUL life insurance policy, then basically you can structure it, your agent can structure it so that you are getting tax-free money in retirement from the policy. A lot of people will refer to this method as building your own bank, and that's what people are calling it, because basically with the insurance policy, you can take the cash value, which is the living benefit, you can take that out at a very low interest rate, maybe like 3 to 5% is the lowest I've seen. And then you don't have to go through a credit check. You don't have to go through an underwriter. You don't have to go through the bank asking you a bunch of questions as to what you're going to do with the money. You don't have to go through any of that. So you control it, right? It's all about control. You're controlling the insurance policy. But that policy is going to be a case by case. You have to, speak with your agent to figure out if that's going to be the best fit for you. But again, it is a policy that, I feel like everyone can benefit from. I see someone in the comments ask, what's the difference? So if you're talking about like a term life versus a whole life, a term life policy is exactly what it sounds like. It's a short-term policy. They typically last 10, 20, or 30 years, right? Once your term expires, you no longer have insurance, okay? And how insurance works is you're going to get approved based on your age and your health. So the younger and the healthier you are, the cheaper your policy is going to be. So, for example, if you lock in a term policy and you never get a whole life policy, and now if you lock in a term at 30 years old and then at 60 it expires because it's a 30-year term, now your age and health is going to change. So even if you try to apply for more insurance, it's going to be harder because you may have a health condition that gets you unapproved, or it just may be too much money to be able to afford that it doesn't even make sense anymore. So I always tell people, if you can get the best insurance when you're young and healthy, because you're going to lock in on that fixed premium. And from there, if you want to buy more insurance policies in the future, which you probably should as your assets grow, then you want to buy more, but you don't wait and just get a term and just be like, oh, I'm good with this term. Like, no, you're not good with the term, because I have people get denied left and right because they have health conditions, right? And they don't even have to be that old. If you're 30 something and you got severe health issues, you're not getting approved for insurance. So I think we see some other another question in the comments related to that. So is it a good idea to get both? Yes, it is a good idea to get both because they're used for different reasons, right? A term policy will allow you to lock in a larger amount of death benefit for a very low price, right? So I was talking to somebody earlier. They're like early 30s. They have a term policy for $1 million and they only pay like less than $40 a month, right? So she's locked in for 30 years on that term policy of $1 million. So if something, God forbid, happens to her within the next 30 years, she has $1 million from that term, which is cheap. But then she may also have a whole life on top of that where she can use to pull from her bank, right? So they're used for different reasons. A term policy doesn't allow you to build your own bank. It doesn't accrue cash value in a term policy. So a term policy cannot be used for the strategy where people are talking about building your own bank and investing with your own policy. So
you dropping some gems. Do me a favor, y'all. If y'all get invited to this conversation, please drop a gem emoji in the comments. Like, seriously, I don't think everybody ready for what you dropping. Nurse Kia had a really good question I don't want to miss. She said, what's the income limit with Roth IRA before you have to use the back door?
I'm blanking on the exact number, Kia, but it's somewhere around, like, I want to say, like, if you're single, it's like 150-ish, around that, or if you're married filing jointly, it's like 2 something. But I'll get that information for you.
All right, great. All right, yeah, I see them gems. She said, save this live, my girl. Yeah, you got comments starting to blow up. Yeah, she definitely a gem that's dropping gems. Let me see. Let's make sure I missed nothing else. All right, great. So now let's talk about stock market investing, and because that's a lot, you know what I mean? Like, my professional background is actually in stock market investing. I have my securities licenses. I have my Series 7, Series 63. I worked at a few different financial companies, working with mutual funds and stocks and ETFs and so forth. IRAs, traditional, Roth, SEP, simple, so many different IRAs. You can have individual 401k, like so many different asset classes and trust and 529 plans and ESAs, education savings account. Like, I work with the whole nine. So what's your thoughts on, again, you know, bringing it back to people who are business owners? Because I see too many business owners. This ain't gonna be me. We used to make $100,000 a month, but now we ain't got nothing to show for it. Now the recession hit, and I went from 100,000 to making 10,000. I ain't got nothing to show for it. I don't own no property. I don't own no stocks. I didn't acquire any more businesses. That's not going to be me. We taking this business income that we generate, we turn it into wealth, owning assets and generational wealth. So from a stock market perspective, what would you recommend? I know you can't give specific advice yet until you get that next license. But what would you say to people as far as stock market investing in mutual funds and all the stock splits and everything going on?
Okay, can y'all hear me? I just went out for a second.
I can hear you.
Okay. So I cannot stress this enough. Black people are not involved in the stock market as they should be. Okay, we're not in the market as much as we should be. And I say that and I say what I said. But basically, how I want to present this to you is basically, if you work a job, if you work at a 9 to 5, or wherever you work, and you have a company retirement plan and you're investing in your retirement plan, which is, when I talk to people, most people are familiar with the 401k. They are familiar with their job's retirement plan. So if you invest into your job's retirement plan, you are already a stock investor. So when people say they're scared of the stock market and all that, there's no way you can work somewhere for 30, 40 years and retire with more money if your money was not invested into the market to grow. So that's number one. You are already a stock investor. You just don't understand it from the perspective that makes you comfortable on doing it on your own. So that's number one. If you have a retirement plan, you already putting money in, you're already a stock investor. Now it's time for you to learn the ins and outs of the stock market so that you can do it on your own, and then you can have access to more companies than what your employer offers, right? Because I used to personally set up retirement plans. We're only allowed to put like 30 or so funds in that plan. So that means you're limited to those funds that they have in that retirement plan. You can't buy other things that's on the stock market like Amazon, Tesla, Microsoft, Apple, Google. You're not privy to buy those things because you are only focused on your retirement account. Okay, so now it's time to, okay, invest in your retirement account, but you should also have your own individual stock account. Why? Because you control it, right? We're talking about control here. You control it. You have access to it. You can buy what you want and pull your money in and out of that stock account whenever you want, right? I'm not suggesting that you do this because there are tax implications, but I'm just comparing control here. At your 401k, you have to ask them for the money. They have to tell you if it's approved or not. With your stock account, you can go in and trade a stock tomorrow and get a couple $100 if that's what you want to do because you control the account. So I would say for anyone who's considering stocks, and especially with this market that we're in right now, here's how I look at it, right? We're going into another recession, or at least that's what we're being told. Although I just seen something today saying that the US is trying to change the meaning of a recession to like pull back on a recession. Some craziness I seen earlier. I'm dead serious. I gotta look it up. But I seen some news blurb. It was saying the US was trying to change the meaning of a recession. But that's besides the point. We are headed into what they call a recession, or at least we think we are, right? Everyone's scared. Everyone's like, why would you invest in the stock market right now? This doesn't make sense. This, like, they're just confused and they're all over the place. Here's what I say to that. Whether you've lived through a recession, you were born, you weren't born, or you were somewhere where you had no idea it was a recession. We've been through recessions before. Okay, we've been through plenty of recessions before. They typically come every 10 or so years. Okay, so what that tells me is that there's companies that have been around for 50, 100 years that we can buy stock in. Do we think that this one recession in 2022 is going to tank those companies to the very bottom, that they're not going to no longer be in existence? 9 times out of 10, that answer is no, right? A company like Microsoft is going to survive a recession, right? Amazon, I believe they're going to survive a recession. So what we should be focused on right now is not being afraid to get in the market, but strategically investing in the market in companies that we believe in long term, that we know or can physically predict that, okay, this company probably won't go out of business. Okay, this company makes sense to invest in because I know that people are still going to buy from this company even during a recession, right? So just compare it to the pandemic, right? There were certain things that people were still buying during the pandemic, and everyone thought the pandemic was the lowest of the low, right? During a recession, they're not talking about giving us no stimulus money, but during the pandemic, they was giving out stimulus money. So we have to think about it from that perspective. And these are the things that they're not going to teach us. They're not going to tell us, but these are the things that they're doing. They're doing these things. So we can't be afraid and be like, oh my gosh, I'm so scared to invest in the stock market. It's really about positioning your money in strategic ways so that you can win, right? That's what I would say to that. But again, overall, there are certain companies that are just not going out of business. So you could focus your efforts on evaluating those companies. And if it makes sense and you can afford to get in, right now, the stock market is down. So you're buying companies at the lowest of the low price, right? So it's kind of like getting your favorite, getting your favorite designer brand at a discount. So that's how I look at it.
Mm-hmm. Yeah, that's great information. And like, just think about how many of us spend money with these companies as a consumer. You know what I'm saying? So it's like, oh, I ain't gonna buy a stock of Amazon. Now it's only $120 a share or whatever or less. But you'll spend money on Prime every month. You'll shop at Amazon all the time. There's boxes lined up at your door every day. You know what I'm saying? You'll buy the new iPhone, but you won't buy the stock. You'll line up for Nikes at the store, but you won't buy stock, and it's probably less than the actual product. So I love that. Just a couple more questions I got. So now we want to tap into one of my favorite things to talk about as of late, real estate. So also, if y'all don't know, Diana is my real estate agent. If y'all need an agent in Philly, PA, licensed in Jersey. Where you just PA and where else?
I'm in Pennsylvania right now.
Okay, right now. You heard her. But if you know you need a deal or want to do something in another state, she can definitely make it happen. You heard me. So, like I said, she is my agent though. But I love, I'm starting to tap into real estate, and I definitely want to talk about that. What's your thoughts on that? Of course, multifamily, singles, being an investor. If someone may just be like, hey, I just want to, get a property. I've been renting my whole life. I just want to get, even if it's a single family home, I just want to actually buy a property, something that I own, something I can pay a mortgage on, something I can pay down. I can potentially get equity or whatever, still an asset that I own. What's your thoughts on everything real estate related?
Right. So before I get into that topic, I just want to just let everyone know, if you didn't know, that the wealthiest people in the world, they own three things. One or all of these three things. They own real estate, they own stocks, and they own businesses. They own real estate, they own stocks, and they own businesses. So we're not reinventing the wheel here. We're literally just copying off of what successful people have already done to build wealth. So we're not reinventing any wheel. So since we're on the topic of real estate, I think for someone who is new and who's starting out and who's like, I want to get my feet wet, I want to get, I want to learn real estate, right? So one of the easiest ways to get into real estate as a new investor or aspiring investor is to buy a multifamily unit, right? So a multifamily unit is, for those of you who don't know, it's one house and it's separate units in the house. So you might have a duplex, which is 2 units. You might have apartment downstairs, apartment upstairs. If you have a triplex, there's 3 units in one house. Or if you have a quad, it's 4 units, right? So that is basically what a multifamily is. And from there, you basically can use a low down payment mortgage, which is either 3 or 3.5% down, depending on your lender. And that will get you into a multifamily. So with that strategy, they call it house hacking, right? So you live in one unit and you rent the other. And the idea behind that is that the second unit that you're not living in will be occupied by a tenant. And ideally that tenant is covering, if not all of the mortgage, majority of the mortgage. So now you still need somewhere to live, whether you live in a multifamily or you rent an apartment. But if the tenant is covering majority of your expenses, that allows you now to save most of that money that you would have been spending on housing. So that's why they call it a house hacking method. And then ideally from there, if you still want to scale in real estate, you can buy other property from there. But just on the very basic level, I would say, if you don't need a lot of space, if you don't really need a single family for your first purchase, you should consider purchasing a multifamily, because what that's doing is powerful, right? The tenant is paying most or all of your mortgage, right? You live there, you're reducing your expenses. And then from there, once you move out, you can rent that second unit out. And now you're getting more money because the second unit is rented. And my favorite thing about that strategy in general is basically that you are building wealth. You have an asset that's being paid down by someone else. That money is not coming out of your pocket. Okay, so that's the power in building that, starting with that one multifamily. And whether you continue to do real estate investing or not, you now have an asset that's being paid down by someone else. And every time your mortgage is paid down, you're getting what's called equity in that property, right? So equity can be used to pull out from, you can go to the bank and say, hey, I want to pull out some equity from my house. They will give you the money. Now you can roll that money into another real estate property. You can roll that money into a business. It's basically similar to having your own bank. A real estate portfolio is basically someone's bank, because they use that as leverage to get money from the property.
Yeah, I love that. So how many of y'all, let me know in the chat, how many of y'all own real estate? It could just be your house, it could be multi, you could be an investor, you could do flips, you might have rentals, like whatever. I want to gauge the room. Let me know who we got in the room tonight. How many of y'all already own property? Or if you don't, how many of y'all are interested in owning property? Definitely let us know about that. So if anybody have any questions, I got my question answered. I got my pen right here too. This information is live. It's not just for y'all. It's for me to get some gems as well. So yeah, let me know if anybody have any questions. We only got a couple more minutes. So if anybody has any specific questions about anything we talked about, you can ask me brief questions if you got about funnels or digital marketing or business stuff in general, or if y'all got questions on stock market investing, insurance, real estate, or anything related to budgeting, even credit stuff, or savings and investing and stuff like that. Feel free to ask it now. All right, we got a good question. Can you please break down the financing of the multifamily and how it works?
Break down the financing of the multifamily. So yes, so basically the financing for a multifamily is basically you have to get a mortgage, right? You have to get pre-approved for a mortgage, meaning you have to have income. Okay, so whether that's business income, whether that's income from a 9 to 5, you have to have stable income in order to get pre-approved. Okay, you need that pre-approval because that pre-approval is going to determine how much house you can afford. Okay, so once you meet with the mortgage lender, they're going to collect your financial information and they're going to say, hey, you can be pre-approved for, I don't know, $250,000, right? So now you have a $250,000 pre-approval that says that you are able to go home shopping. Okay, so then you get with your realtor and you say, hey, I'm pre-approved for $250,000. Let's look at homes. Your realtor will set you up to start receiving homes, right? So you'll start looking and then we'll go out in the field and we'll start looking at the houses in person to see what they actually look like, right? Because pictures can be deceiving, especially in the real estate game. People be posting these pictures and you get there, you be like, this the same house?
I've been learning that as of late.
Yeah, so the picture's going to look nice, but you got to go out to see it, right? So from there, I guess they were more so talking about the financing. I don't want to get too much into like what happens after you go to the houses. But yeah, so basically you need to have income, right? You need to have consistent income. Typically, they want to see 2 years of consistent income where you're able to show tax returns, W-2s, bank statements. From there, they're going to evaluate your debt. So depending on how much debt you have, that's going to determine your pre-approval, right? So the lower your debt, the better. So if you have a lot of credit card debt, consumer debt and things like that, you want to think about paying some of that down before you really start getting into trying to get pre-approved, right? So it's a very simple process, honestly. If you have income and you have tax returns and W-2s for the last 2 years, and your credit score is super important. You want to have at least like a 660 or higher to get the best rates. If you don't have your credit together, then that's something that we can work on together. We can get you, credit repair, or it may just be a few little kinks you need to change in your credit profile in order to boost your score to get you approved. But the pre-approval process is very simple. As a realtor, I walk my clients through that entire process. So I prefer for my clients to meet with me before they meet with a lender because I'm big on education, right? So I'm going to give you the full-blown education behind how all this works so that you're not just going into the woods by yourself and you know what to expect, right? So I have my clients consult with me first. I give them the blueprint in the game. We figure out if they're ready to move forward. If they're ready to move forward, then I connect them with the lender. Okay, so when they talk to the lender, they already know that they got to give tax returns. They already know that they need their W-2s. Like, I prep my clients. But what you will find is that most realtors don't do that, right? They don't do that, but for whatever reason, I would never agree with it, but they don't do that. And what happens is people get discouraged because if you reach out to a realtor you seen on Instagram and you like, yo, I really want to work with her, and you call her and she's like, oh, well, you don't have a pre-approval yet? Oh, well, come back when you get a pre-approval. You're going to feel shaded. You're going to feel slighted. Like, well, damn, I just called you because I don't even know where to start. And you telling me to go get a pre-approval. I don't even know what a pre-approval is. Right? So a lot of realtors are missing that piece, that education piece. Like, how can you expect someone to know something if they're a first-time buyer? Or how can you expect someone to know something if that's what they were calling you for? So a lot of people just commend me on how I run my business because I'm really big on that education factor. And I noticed that I have a lot of realtor colleagues. They don't take the time to explain all of this to their clients. And if that works for their business, cool. But I need my clients to be thoroughly educated. One, it helps me save time because I don't have to answer a bunch of questions throughout the process because my clients already know what's going on. right?
Mm-hmm.
And then two, I just want people to be educated. Like if you're buying a house, like this is a major purchase. So I don't want people to be confused. I don't want people to be, you know, having to call other realtors. I have other people's clients that reach out to me all the time. Like, oh, what do you think about this? And I'm like, well, you didn't talk to your realtor? They're like, oh, well, they're not getting back to me. Well, sorry, I can't help you. You chose the wrong realtor. Like, I can't do nothing. And one thing I would say about that is, I don't want to get too much off topic, but if you have a realtor, you need to be talking to that realtor and that realtor only. And the reason being is because legally, as realtors, we are licensed professionals, right? We're licensed professionals, just like an attorney, just like a financial advisor. We cannot talk to other realtors' clients. We can get in trouble. So it's not like to say that, oh, you know, we're trying to be mean because we're not answering your questions, but you need to do your due diligence before you start the home buyer process. I say interview three realtors and see what they're talking about. Ask them questions and just see if they're a good fit for you. Ask them what's their preferred method of communication, right? If you're someone who always want to get on the phone and they only prefer email, then that may not, I mean, not to say that's a deal breaker, but that may not work for you. You have to interview the realtor. Don't just go and pick someone because they're popular or they look nice on Instagram, because I can tell you now that there's people that pick the wrong realtor and they reach out to me all the time asking for my advice. And I don't really have much advice for them. If they're under contract with another realtor, I'm not losing my license for consulting with another realtor's clients. Like, that's not what I'm doing. So that's the process.
Definitely, and I can vouch for everything that she just said about how she takes care of her clients. She educates her clients. The process is very easy. It's very relatable. Communication is 100% on point. I am one of her clients, and we're going through the process, getting closer and closer to the closing table. It's coming soon. Y'all won't see it. We popping bottles at the table. I'm letting y'all know. Listen, she already know. So we
popping bottles at the table. One of my other clients, we pop bottles at the table. So this would be my second time popping bottles at the table.
Yeah, y'all ain't pop this though. Y'all ain't popping gold bottles. But you know what I'm saying? We popping them gold bottles. I'm letting y'all know. If you know, you know. I see another question from Sierra. I'll get to that in 1 second. But I see Nurse Kia, her question, and we got to be brief because I have somewhere to be. Do I have to live in the investment property initially?
No, Kia, if you're just a straight up investment property, the goal should be to put a tenant in there. But if you're buying as a home buyer, like doing a house hacking method, and you're using like FHA, they do require you to live in a property for at least 1 year, I believe, before you can move out of the house. But I personally know Kia. So for your investment property, once we start doing our groups, you're going to get more one-on-one with me to show you how to really do the investment strategy. So Kia is actually in my my Nurse Academy. So that was a great question, Kia. For investment property, no, you don't have to. There's just a different way we have to analyze the deal and a different way we have to purchase the deal.
All right, great. All right, so last question. What if you have a high credit score, but you have gaps in your 2-year work history? That's a good question.
Yeah, that's a really great question. So it depends on the gap, right? The pandemic has left a lot of people in a gap, right? So there are lenders that understand that, right? But if the gap has to make sense, right? If you were just unemployed and you didn't have any income, they're going to be like, oh, we want to see some consistent income, right? And then it really just depends. Like if you're a W-2 employee and then you may have like a few months off from work for whatever reason, pandemic or health issues or whatever, and you get another W-2 job, you should be okay if you have like at least like 6 months or so in income. But if you're a business owner, they're going to look at that completely different, because they're going to say, hey, where's the consistency in your income, right? So they're basically, the lender is trying to point out if your income is consistent enough in order to pay back this loan they're about to give you, right? So the lenders will consider a W-2 job more consistent because salary is pretty much guaranteed, right? Business income can fluctuate. So they will look at you differently if you have a 9-to-5 salary job versus if you have a commission or self-employed or business job. But I would say I would need more context on what the gap is and what that look like before I can say if you would be ready or not. But if you are somebody who's interested, you can click the link in my bio to schedule a consult, a home buyer consult. Even if I can't help you purchase the home for whatever reason, because maybe you're not in the state that I'm in, I have partners everywhere. So if you just need that education piece, just schedule a free consult with me and I'll look at your case.
All right, great. Yeah, that was a really good question. All right, so last thing, if anybody wants to work with you, if they want to get into your programs, like you said, if they were interested in purchasing a house from you or will get any of your amazing information that you share, how can they get a hold of it and how can they stay connected to you?
Yeah, so definitely follow me on here at Dayana Reeves. If you go to the top of this live and you click the down arrow, you'll be able to see our pages. So make sure you're following both of us on here. So you'll see me post free content about financial information. If you're a nurse or a healthcare professional and you want to be in my Wealthy Nurse Academy program, then you can definitely click the link in my bio for that. And then if you are interested in life insurance or real estate, I also have 2 links in my bio for that as well. So go to my page, check out my resources. I have free resources as well as services. So I have a wealth of information on my page. All you need to do is go there and click the bio link and everything is there for you.
One-stop shop. You know what I'm saying? Everything related to finances, insurance, real estate, stock market investing, whatever you need, she is the plug. So make sure you go into her bio. Thank you so much. This was an amazing live. If y'all got put some claps down in the chat. You can put some emojis, some gems, some fires, like whatever it is. Make sure you definitely put that in the chat. Thank you so much for coming on, just share this information. I know your time is very, very valuable. So I definitely appreciate you. Things should go in and out again.
Sorry, I paused again, but thank you again, Ryan. I appreciate it. This was a great live.
Definitely. Got some fires coming in. So yeah, we're going to do it again very, very soon. We're going to make sure we save this live. Click the link in her bio. Everything else, have a great night.